My dear friends, we are in the chapter internal reconstruction. So in the last class, we done like 4 to 5 problems, which are mainstream problems based on various methods of internal reconstruction, like alteration of share capital, reduction of share capital, variation in shareholders' rights. Majorly our concentration on compromise and arrangement agreements. So you've seen the basic agenda or the basic objective of internal reconstruction itself is showing the financial statements at their true and fair values. So for that purpose, first of all, we should need to take approval from the court. Once court approved our scheme, then we should initiate the internal reconstruction process. So then we will make various arrangements with the various parties. It may be a compounding activity. So to the extent of sacrifice made by the other parties, we can simply make it transfer to reconstruction account or capital reduction account, whatever the case may be. At the end in the problem, whether it is clearly mentioned or not, whatever the profit or loss we derived through the process of internal reconstruction is ultimately make it set off with the reconstruction account itself. And related to tangible assets or any other assets, if it is specifically mentioned, then only we will make it knock off with the reconstruction account. Otherwise, we will simply shown as the same figures post reconstructed balance sheet. Am I right? So after knocking this P&L account debit balance or any other specific asset, still if any balance is appearing under reconstruction account, which is nothing but capital profit, that's why we should need to make it transfer to capital reserve. So I covered all types of reconstruction except the concept of surrender of shares, right? So let me explain the content or concept related to the surrender of shares. Then we'll move on this method of internal reconstruction, how it is going to happen as well. So which is surrender of shares. Guys, you might have heard the word forfeiture of shares either in your foundation or maybe either at any curriculum. So, but this is the first time you are come acrossing a different terminology, which is surrender of shares. First of all, my question is how the surrender of shares concept is different from forfeiture of the shares, or let me know what is the meaning of forfeiture of the shares. So forfeiture of share concept is going to apply when the shares are partly paid up, or else the company made a call, but the shareholder unable to repay that call amount in time. Then the right attached with the company to cancel the existing shares without paying any single rupee to the shareholder. Such cancellation is known as forfeiture of the shares, right? So simply a forfeiture of shares concept is going to applicable when calls in arrears exist. When calls in arrears exist, it is the right of the company to cancel that particular shares. Such concept is known as forfeiture of the shares. So it is a right given by the Companies Act 2013 to each and every company. Do you agree? Sir, is it surrender of shares concept is like similar to forfeiture of the shares concept? No. Nowhere in the Companies Act 2013 there is a discussion about surrender of shares. I mean, company have a right to ask to surrender such shares. No, company doesn't have any such type of right as per the Companies Act 2013. Then how this surrender of shares concept is going to evolve? In case of internal reconstruction, if the company want to reconstruct their existing financial statements, if the court may approve, if the court approves and shareholders are willing to surrender their shares to the company, then only the surrender of shares concept is going to evolve. There is no provision in the Companies Act 2013 dealing with surrender of shares concept. It's completely different from forfeiture of the shares. And one more thing, forfeiture of the shares concept is going to applicable when calls in arrears exist, but surrender of shares concept is going to applicable if court approves and shareholders willing to surrender. It's not due to calls in arrears. It is not due to call money was not yet paid by the shareholder. It is form part of the internal reconstruction to showcase the financial statements a true and fair view. If the existing shareholder wants to surrender voluntarily on themselves, then at that point of time, the company can accept such a shares as a surrender. Do you understand? Sir, rather than sacrificing themselves, why they are surrendering their shares, sir? I'll tell you. So you can imagine a listed company. If a particular shareholder cancels certain portion of the existing value, or a particular shareholder sacrificing some portion out of his existing value, then company should need to cancel that particular share to that extent. Again, if at any point of time company required, it should need to issue the new shares. It's too difficult for a listed company, already it is a sick company, to issue the further shares because it should need to pay listing fees. Do you understand? So the legal procedure, it should need to continue. The compliance cost, it should need to continue. So to avoid all such things, rather than canceling the existing share and whenever requirement is there, going for new shares, rather than going for new shares, it is always a better choice to surrender the shares of the existing equity shareholders who want to sacrifice their extent. Then whenever the requirement is there, requirement means, for example, for debenture holders, we should need to issue certain equity shares. Then I will utilize the shares which were surrendered by certain equity shareholders. Our shares may be surrendered by certain preference shareholders. Maybe there may be a obligation to repay amount to the creditors in the form of equity shares during the process of internal reconstruction. Then I may utilize shares which were surrendered by the shareholders. So that is the concept behind evolving this whole content. And nowhere it was discussed in the Companies Act 2013. Hope you understand the background story of the surrender of shares. Sir, then coming to the accounting treatment aspects, which type of accounting treatment I should need to provide when the shareholders voluntarily decided to surrender their shares, and at the time of utilization of such shares, which type of accounting treatment we should need to provide. Such issues I'm going to discuss right now. Now, issues related to accounting treatment. Sir, let me take one example for your better understanding. Uh, so I have equity share capital for 10 lakhs. Sir, number of equity shares are 1 lakh equity shares at the rate of 10 rupees each. Let us assume. Now, out of this 1 lakh equity shareholders, 50,000 equity shareholders ready to surrender their shares. 50,000 equity shareholders voluntarily surrender their shares. Equity shareholders voluntarily surrender their shares during the process of internal reconstruction. Definitely, we should need to cancel the share capital, right? We are canceling the share capital temporarily, but we are not canceling the shares. You should need to remember one thing. We should, for the accounting aspect, we are canceling the share capital, but still we are not canceling the shares. So to decrease the share capital, we should need to debit that, right? There is increase in share capital means credit, decrease in share capital means debit. Then temporarily the entire share capital amount should need to be transferred to share surrender account. So the entry is equity share capital data, equity share capital account data. If it is preference share capital account data, equity share capital account data to share surrender account. How much? 50,000 multiplied with 10, 5 lakhs. Now, the number of shares which were placed under share surrender, we can utilize at later point of time as a distribution among the various parties. This share surrender may be distributed to another shareholders also. The number of shares which are lying at a share surrender, you may distribute to banker, creditor, debenture holder, whatnot. Everyone will cover. It's like instead of paying the money, the company decide to issue the shares, you can utilize the share surrender. That's it. So now concentrate. For my company, so let us assume 8% debentures. We have 6 lakhs. We have 8% debentures, 6 lakhs. We are going to discharge this 8% debentures in this manner. Out of this 6 lakhs, 3 lakhs we are going to pay in the form of equity shares, and the other remaining 3 lakhs they are going to I'll do one thing. 4 lakhs I'm paying in the form of equity shares. For 2 lakhs, to the extent of 2 lakhs, they are sacrificing. Sacrifice. Now the issue is to issue the equity shares to the debenture holders is not a new issue. We already discussed the accounting treatment, how we should need to handle this situation. But the problem is here, the equity shares are going to issue by the company out of share surrender. These are not company owned shares. These are the shares which were surrendered by the some of the shareholders earlier. Now, what is the accounting treatment we should need to provide? Concentrate, all of you. Sir, whenever there is utilization of share surrender coming to the picture, whenever utilization of share surrender coming to the picture, you should need to pass one entry. Sir, at the time of share surrender, we passed equity share capital to share surrender, right? You should need to cancel the share surrender. Again, you should need to make it credited the share capital. Whenever there is an utilization of share surrender, again, you should need to make it convert the shares into, again, you should need to make it convert share surrender into share capital. So that's why share surrender account should need to be debit or cancel share surrender account debtor to equity share capital account. Sir, how much amount you are utilizing? So to the extent of 4 lakhs only you are utilizing. So that's why you can simply make it transfer to the extent of 4 lakhs here. Now concentrate, all of you. Sir, actually, whenever a particular shareholder surrender their shares means, which is profitable situation to the company. Actually, we should need to recognize profit due to this reconstruction. But at the time of share surrender, you not recognize that profit. At the time of utilization, just now you passed one entry. In that particular entry also, you not recognized any profit. Please, all of you remember, this concept is very much important. The profit derived from the share surrender, we are going to recognize not at the time of share surrender, at the time of utilization of share surrender. Again, I am repeating, profit derived due to share surrender, we are not going to recognize at the time of share surrender. We are going to recognize at the time of utilization of share surrender. Sir, if that is the case, you passed only one entry. Where is the reconstruction account, sir? Please concentrate. When we are transferring to reconstruction, now out of the 8% debentures, 8% debentures account debtor, to the extent of 4 lakhs, I should need to cancel. That 4 lakhs, I should need to make it transfer to reconstruction account. Reconstruction account. Sir, this reconstruction account transfer entry, we are calling as recognition of profit due to utilization of share surrender. We are not directly recognizing share surrender to reconstruction and 8% debentures to equity share capital because it is meaningless. Whenever you are utilizing the share surrender, first the balance under share surrender you should need to cancel, you should need to make it increase the share capital. This is only for the purpose of transferring the share surrender to equity share capital. But at the time of utilization of share surrender, where is the recognition of profit, sir? You should need to cancel the liability and recognize the profit. Sir, we can't understand really what is going on here. Please concentrate here. What is going on here? Now we are making payment to 8% debentures, correct? Now to these 8% debentures, we are making payment through issue of equity shares, right? Is it issue of equity shares happen out of pocket of the company? No. Issue of equity shares happen out of utilization of share surrender. That means which is profitable situation to the company only, right? So that's why I'm transferring that profit to the reconstruction account. But that profit I may not record at the time of share surrender. I may recognize that profit at the time of utilization of share surrender to the various parties. That is the point I want to convey. Do you understand, guys? So first, all of you, let me know. Do you understand this point? If you want, I will give the thumb rule. What is the thumb rule? So profit on share surrender or profit due to surrender of shares. I'll write like this. Profit due to surrender of shares will not recognize at the time of surrender of shares. It will be recognized at the time of utilization of share surrender. So indirectly, at the time of utilization of share surrender to a particular liability holder, we are attaining a profit because the company is not issuing shares out of their pocket. The company is going to issue such shares by utilizing the share surrender. That's why they are recognizing the profit. But at the time of utilization of share surrender, the entry is share surrender to equity share capital. To recognize profit on such share surrender, liability to reconstruction account. Sir, only for part only I provided the accounting treatment. What about the other part, sir? What about this real 2 lakhs? Real 2 lakhs is sacrifice, right? Whenever they are sacrificing, what is the journal entry? 8% debentures to reconstruction account. The same entry again will be repetitive, right? Tell me, guys. If there is a real sacrifice, liability to reconstruction. Here, liability to reconstruction already entry passed, na? That's why what I should need to do, 4 lakhs plus 2 lakhs is the real sacrifice. 4 plus 2, it will be 6 lakhs. For the same aspects, I should need to pass the entry with 6 lakhs amount, but out of which profit due to share surrender 4 lakhs, profit due to real sacrifice made by the liability holder 2 lakhs, total 4 plus 2, 6 lakhs. That's where the entries will be share surrender to equity share capital 4 lakh, liability to reconstruction account 6 lakhs. Is it okay? Fine. Super. Now, let me extend some more examples for better clarity. Okay. Sir, please update that class when the classes will start for May 2024 CA Inter. It is there in ICAI admin team. Okay. So just they will provide the like timesheets for us. So according to the timesheets, just we are taking the classes. If you are having any doubt, so just you can contact the ICAI admin team. But probably out of my experience, how they are going to start the classes. So once the exams will be over, like in the November 2023 attempt, from December onwards, they are going to start for May 2024 attempt. Okay. But I think so in case of our accounting, the syllabus is not increased, the syllabus is decreased. That's why either of the topics it may be covered in either group 1 or group 2. The two lot of chapters are completely based on accounting standards itself. Already there in ICAI tube. If you want, you can consider them. Okay, fine. Very good point actually you reminded. So I beautifully articulated the accounting standard content or the concept. So mind maps. So a lot of intricacies, everything was provided in my material out of benefit of the larger audience. So at the end of my sessions, I'll try to upload the accounting standards as well. Okay. So in deeper manner, just I provided the content. And if you want to check, I will provide a link where you can get the entire marathon type of sessions for accounting standards. You can simply go through the entire accounting standards within no time, like it will take 10 to 12 hours. Okay, fine. One second, one more student just is asking one more doubt. Sir, if the shares surrendered are not sufficient to discharge the debentures, can we issue new shares, sir? Obviously, if the point here is, sir, if the share surrender amount is sufficient, then we will utilize that. If it is not sufficient, definitely in other means we should need to discharge the liability holders, right? We can't avoid that. It is all depending upon the how you are entered agreement with the liability holders. Okay, fine. Let me take another example for discussion. This is example number 2. So again, the same 8% debentures for consideration. Amount will be 6 lakhs only, same amount. Now, out of this, 8% debentures, we are going to pay in the form of cash to the extent of 2,50,000. We are going to repay in the form of cash. For the remaining balance means 3,50,000. Correct? The debenture holders are ready to sacrifice the remaining balance to the extent of 3,50,000. The 8% debenture holders ready to sacrifice, provided in return they're expecting 1 lakh worth of equity shares. Now the company want to, this is 1 lakh worth of equity shares, not 1 lakh equity shares, worth of 1 lakh equity shares. The company is going to issue this 1 lakh amount of equity share capital out of share surrender. Now, how to provide accounting treatment? Again, I'm repeating the example. So the existing debenture 6 lakhs. So in the form of cash, we are going to settle down for 2,50,000. Remaining 3,50,000, they are going to sacrifice. Provided in return, they are expecting to the extent of 1 lakh worth of equity share. The company is going to issue for this 1 lakh worth by utilizing the share surrender account. Can you please all of you try and put in the chart box the entries? I require the entries in your chart box. No, still I'm not getting any entries. Please, all of you be participative, guys. Okay, I'm getting answers. Something like this. Debentures account that are 6 lakhs to cash 2.5 to reconstruction 3.5. Oh, so 8% debentures to cash 2.5 lakh. Share surrender account that are to equity share capital account 2.5 lakh. So very few members are participating here. So now concentrate here. Sir, for this, no one will have any doubt, I think so. Okay. For this, the entry is 8% debentures account that are to cash account. That is 2,50,000. This is everyone will know. Now coming here for the remaining 3,50,000, these debentures holders completely outrightly sacrificed. That means gross sacrifice or gross waive off will be 3,50,000. But in return, they are expecting equity shares first. To the extent of 1 lakh worth of equity shares they are expecting. That means net sacrifice made by them how much? Really, how much they are sacrificing? 2,50,000 only. Now I know one thing. 8% debentures account that are to the extent of net sacrifice only, I should need to make it transfer to reconstruction account. So that's why 8% debentures to reconstruction, 2,50,000, that is sure. Do you agree this point, all of you? This is in general, as usual, as per our yesterday's or the previous discussions only. Now, if it is directly issued by the company, how company fills 8% debentures to reconstruction to equity share capital, it may write to the extent of 1 lakh. Now 1 lakh company is not going to issue out of their pocket. This 1 lakh equity share, worth of equity shares, company is going to issue through utilization of share surrender. Whenever there is utilization of share surrender exist, I need to pass two entries. That is share surrender account data. Tell me guys, at the time of utilization of share surrender account data to equity share capital. That is how much worth? 1 lakh. And due to share surrender, whatever the profit enjoyed by the company, such profit I should need to make it transfer to reconstruction by passing the entry 8% debentures to reconstruction, that is plus 1 lakh. So total, I should need to pass 3 entries here. One is for pure payment of cash, liability to cash. And the other one is utilization of share surrender to equity share capital. And for the real sacrifice of 2,50,000, liability to reconstruction. And for recognition of profit on share surrender, that 1 lakh I am including here. So that's why liability to reconstruction totally I should recognize with 3,50,000 amount. Tell me guys, is it correct? Is it clear? Anyone having any doubt? Okay, fine. I think so all the important aspects were covered under share surrender. So this is time to go for a problem. And let me close the concept. Sir, after completion of all these things, what I should need to do? So if at all still any balance exists under share surrender, I utilized as per my requirements. So after that, what I should need to check at the end, I will check the balance under share surrender. The balance under share surrender should need to be transferred to reconstruction account only. Here I am really cancelling the shares. Right now there is no further requirement of shares for me. That's why whatever the balance exists under share surrender, just simply I'm transferring to reconstruction account. You know the story after transferring balance to the reconstruction account. Such reconstruction account you can utilize to set off the P&L account debit balance. Okay. And if any other unrepresented assets which is mentioned in the problem, you may knock it off. Then still if there is any balance under reconstruction after making set off, then you may transfer to capital reserve. So this is the flow you should need to be adopted while presenting balance sheet and providing journal entries. Is it fine? Sir, can we pass combined entry for cash paid and profit on reconstruction means 1 and 3 entry? So just you want to pass. Yes, if you want, you can pass the combined entry. No one will object you. So you can pass the combined entry like 8% debentures account that are 6 lakhs, 2 cash 2,50,000, 2 reconstruction 3,50,000. Okay, just for your understanding and your convenience, just I told you. But if you pass entries like this always, without having any confusion, you may will provide. So if you want to try to put a compulsive entry, it will create a lot of confusion. Once you are comfortable in the content and the concept, always it is your ball game. So whichever is convenient, you can simply adopt the same procedure. Fine. Let me take problem based on surrender of shares. Yeah, that is problem number 8. All of you please come to main material, guys. So the summarized balance sheet of Revise Limited as of 31st March 2011 was as follows. So assets information given, machineries, inventory, trade receivables, bank, and which is profit and loss account, debit balance. So which is P&L account, debit balance. So next, if you come to liability side, 10,000 equity shares of rupees 100 each fully paid up. So face value is 100 and all the equity shares are fully paid up. And unsecured loans, 12% debentures exist. Accrued interest is there. Next, coming to current liabilities, trade payables is there. Provision for income tax is also exist. Next, come down. It was decided to reconstruct the company for which necessary resolution was passed And sanctions. Sanctions means court approval or obtained from appropriate authorities. Appropriate authority means it is NCLT, National Company Law Tribunal. Accordingly, it was decided that each share is subdivided into 10 fully paid up equity shares of rupees 10 each. Sir, which method of internal reconstruction this is? Point number 1. Which method of internal reconstruction? Alteration of share capital, right? So which is alteration of share capital. So in case of subdivision, there is no change in paid up value. There is only change in the face value and number of equity shares. You can also provide the same accounting treatment, that is equity share capital accounted to equity share capital. So cancel the old face value 100, credit the new face value. There is no change in the paid up value. And being conversion of each equity share into 10 new equity shares during the process of internal reconstruction. So next, after subdivision, each shareholder shall surrender to the company 50% of his holding for the purpose of reissue to the debenture holders and trade payables as necessary. So once the subdivision completed, for example, if I hold 10 shares, out of which I should need to surrender 5 shares, and the shares which were placed on the share surrender will be utilized by the company later on for the purpose of making repayment to debenture holders and trade payables. Okay. Out of shares surrendered, 10,000 shares of rupees 10 each. Actually, in share surrender, 50% means totally how many number of shares? First, consider all of you. Existing 10,000, if they go for subdivision, then the shares will become 1 lakh. Correct. Out of this 1 lakh, 50,000 number of shares were there under share surrender account. Then under 50,000 number of shares which were placed under share surrender, 10,000 shares of rupees 10 each shall be converted into 12% preference shares of 10 each fully paid up. That means initially these entire 50,000 shares are equity shares, because who actually surrendered the shares? Equity shareholders. Now out of this 50,000, first the company is going to convert 10,000 shares into the preference shares, which are preference shares. The remaining 40,000 shares are just they are acting as equity shares. No need to convert. These were already equity shares only. Okay. The claims of the debenture holders shall be reduced by 75%. In consideration of the reduction, the debenture holder shall receive preference shares of rupees 1 lakh, which are converted out of the share surrender. Okay, this is related to the debenture holders dischargement. So we will check in detail it later on. So coming to point number 5, trade payables claim shall be reduced to 50%. It is to be settled by the issue of equity shares of rupees 10 each out of the share surrendered. But I know one thing, debenture holders are going to be discharged out of share surrender. Trade payables are also discharged out of share surrender. That is more than enough. Later on we will check. Balance of profit and loss account to be written off, whether it is mentioned or not, we will do the same thing. The share surrender and not reissued shall be cancelled. Shall be cancelled means transferred to reconstruction account. You are required to show the journal entries giving effect to the above and the resultant balance sheet as well. So let me take up one by one point in detail in my OneNote discussion. So problem number 8. Sir, first let me write the entry for subdivision. Equity share capital account at R. So old face value how much? 100. Amount 10 lakhs. 2 equity share capital, new face value will be 10. Amount will be 10 lakhs. Is it fine, guys? So narration, if you want, being each equity share subdivided into 10 equity shares. So now the number of shares will become 1 lakh equity shares. You can write the narration like this also, being a conversion of, being subdivision, the 10,000 equity shares at the rate of 100 each will become 1 lakh equity shares at the rate of 10 rupees each. In any way you can convey. Next, after subdivision, what happened? To the extent of 50% of his holding, for the purpose of reissue to debenture holders and trade payables, surrendered to the company, right? Now, whenever there is a surrender of shares exist, then the entry is equity share capital should need to be debited. The capital should need to be debited only for 50%, guys. That is for 5 lakhs. So this is face value 10 rupees only to share surrender account. That is 5 lakhs. Now, in this 5 lakhs, how many number of shares? Just for your reference, 50,000 equity shares are there actually. Originally, 50,000 equity shares are there. Now, if you observe in point number 3, it is clearly given that out of shares surrendered, 10,000 shares of 10 each shall be converted into 12% preference shares of 10 each fully paid up. That means out of this 50,000 equity shares, 10,000 equity shares are converted into preference shares. That is 12% preference shares. Sir, for this conversion, do I need to pass any entry, sir? Actually, no need. I'll tell you the reason. If you want to try to pass that entry, you can pass. Then you can understand there is no impact. Why? Because if you want to convert, first what you should need to do, you should need to cancel. Just for your understanding, I'm telling you, you should need to cancel the share surrender and credit the equity share capital to the extent of this 10,000 shares. That is 10,000 into 10 rupees, 1 lakh, 1 lakh. Now you can convert the equity shares into preference shares. That is equity share capital account at R2, the 12% preference share capital, 1 lakh, 1 lakh. Now this 12% preference share capital, you should need to make it transfer to share surrender, because at later on, these preference shares we are going to reissue to debenture holders and trade payables whenever necessary. So 12% preference share capital, 1 lakh to share surrender. So now what is the impact here? Concentrate all of you. Equity cancel. 12% preference, 12% preference cancel. Share surrender debit, share surrender credit cancel. Now, rather than passing all these entries, simply you can assume out of this 50,000 equity shares, 10,000 are converted as 12% preference shares, remaining 40,000 just they are continuing as equity shares. Do you agree? Or if you want to pass these many entries, you can pass. No one will object you. Okay. So, but I am not passing any entries here because there is no impact. So simply I'm treating out of this 50,000, 10,000 were preference shares, remaining 40,000 are equity shares. Do you agree? Fine. Now, you can go with point number 4, the claims of the debenture holders. First, if you come to the debenture holders, claims of the debenture holders means principal, interest. Both are claims of the debenture holders only. That is 2 lakhs plus 24,000. Total 2,24,000 will be claims of the debenture holders. First, let me put here claims of the debenture holders. 2 lakhs principal plus 24,000 is interest, which is totally is 2,24,000 will be the claims of the debenture holders. The claims of the debenture holders shall be reduced by 75%. Shall be reduced by 75% means, 75% means, 75% means 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 75% 75% is they are going to sacrifice. Am I right? 75% means how much? For principal, 2 lakhs into 75% is 1,50,000. And for interest, 24,000 into 3 by 4, that is 18,000. What about remaining 25% is? If nothing is provided means they are still continuing. Okay, he is talking about this part only. That means it should need to be shown in balance sheet. The remaining part should need to be shown in balance sheet. Okay, the claims of the debenture holder shall be reduced by 75% in consideration of the reduction. They are ready to sacrifice 75% means this is gross sacrifice. They are in gross ready to sacrifice this amount in consideration. So in return of this reduction, the debenture holder shall receive preference shares of 1 lakh. What they are expecting? They are expecting preference shares for 1 lakh. So gross sacrifice 1 lakh. Sorry, gross sacrifice 1 lakh 50 plus 18, that is 1 lakh 68. In return, they're expecting 1 lakh. That's when net sacrifice how much, guys? Really, they are sacrificing to the extent of 68,000 only. Net sacrifice is 68,000 only. And that too, these preference shares are going to issue out of share surrender. Okay, this is the point what they conveyed. Now let me know the accounting treatment, all of you, quickly. Sir, first, for at the time of utilization of share surrender, you should need to issue the preference shares. For that, first let me write the journal entry. That is share surrender account at R2. Preference share capital now. Earlier it is equity share capital. We converted, that's why, which is preference share capital. Share surrender to 12%. How much percentage? Preference shares here. Yeah, 12%. Share surrender to 12% preference share capital. How much? 1 lakh. Now, you should need to cancel the debenture holder claims. That is, debenture holder claim means 12% debentures as well as accrued interest. You should need to cancel 12% debentures account at R, accrued interest account at R. To reconstruction account. Guys, what is the net sacrifice made by them? Real sacrifice made by them? 68,000. That means to the extent of 68,000, it is the real sacrifice. Just hold for a second. Sir, we are not recognizing the profit on share surrender utilization. So due to profit on share surrender utilization will be 1 lakh. So to the extent of 1 lakh should need to transfer to reconstruction account. That is liability to reconstruction. That is 1 lakh. So total will be 1,68,000. So that's why 12% debentures will be 1,50,000 and accrued interest will be 18,000. Now out of this 1,68,000, real sacrifice will be 68,000 and the remaining 1 lakh will be profit due to utilization of share surrender. This is the entry we should need to pass. So the entry share surrender to 12% preference share capital and a liability to reconstruction. Is it fine, guys? All of you? Next. The remaining 25% as it is, we are carry forward to balance sheet. No issues for that. Now let me check with point number 5. Trade payables claim shall be reduced to 50%. It is to be settled by the issue of equity shares of rupees 10 each out of share surrender. So now let me come to the trade payables then. So here trade payables. So in balance sheet, trade payable was 72,000. Trade payables claim shall be reduced to 50%. That means out of this, straight away 50% sacrifice. It is to be settled by the issue of equity shares of rupees 10 each out of share surrender. It is to be settled by means in consideration of that. No. It is to be means for the remaining 50%. They are going to settle in the form of equity shares. These equity shares issued by the company through utilization of surrender of shares. That is the point he is conveying. Now, whenever there is utilization of surrender of shares exist, then the entry is, tell me guys, surrender of shares account at R. So this is the first entry always. Surrender of shares account at R to equity share capital. 50% means 36,000. Now here gross sacrifice and net sacrifice will be the same. So that's why trade payable account at R to reconstruction account. So sacrifice is 36,000. Then for profit on share surrender also we should need to recognize for another 36,000. So total will be 72,000. This is the entry we should need to pass. These are the two entries. Is it okay, guys? All of you in line with me? No confusions, right? Next, sir, after point number 5, balance of profit and loss account to be written off. The share surrendered and not reissued shall be cancelled. First, all of you let me know here the remaining balance under share surrender account after passing these many entries. First, in second entry, 5 lakhs, positive figure. Then related to claims of debenture holder, share surrender debited with 1 lakh, that's why minus 1 lakh. Next, in case of trade payable, share surrender debited with 36,000 minus 36,000. So that's why balance under share surrender was 3,64,000. Whatever the balance exists under share surrender, you can simply make it transfer to reconstruction account. To reconstruction account, 3,64,000. This is cancellation of share surrender and transfer to reconstruction account. Now after this, what I should need to find? I should need to find balance under reconstruction account. So check with again the first entry onwards. First entry, there is no balance under reconstruction. Second entry, sorry, 1 second. First entry, there is no balance. Second entry, there is no balance under reconstruction. So claims of debenture holders, reconstruction 168. You can start in your calculator 1,68,000. In case of trade payable, reconstruction plus 72,000. Next, cancellation of share surrender, you will get 3,64,000 plus 3,64,000. So total balance under reconstruction right now, balance of reconstruction is 6,04,000. Now you can check the P&L account debit balance given in the problem. So profit and loss account is 6 lakhs. You can simply knock off the P&L 6 lakhs here. Any other thing is mentioned apart from the P&L? Nothing, right? So the remaining balance of 4,000, you can make it transfer to capital reserve. So the entry is reconstruction account at R 6 lakhs 4,000 to P&L 6 lakhs to capital reserve 4,000. These are the journal entries you should need to provide, guys. Sir, I done with journal entries part. So please all of you do balance sheet as HW as usual. Sir, on daily basis, I am giving the HW, whether you are doing or not, I don't know. Okay. So please all of you make it complete as on that particular day itself. It will increase your level of confidence as well. Okay. Fine. This is all about internal reconstruction, guys. We'll do one thing. So let's take the break at this moment. Please all of you assemble by 8:15, guys. Okay. If at all, if any other problem is need to consider, I'll consider. Otherwise, let me move on with the liquidation chapter post break. I'll decide post break. Okay. If any special problem is there, I will take into the consideration. Otherwise, let me directly move on with the liquidation chapter. Please all of you go for the break. Should I mean live or not? Hi, sir. Can you hear me? Can you hear me? Yeah, yeah. Thank you. Yeah, fine. Let me continue post break, guys. Welcome you all back. Uh, so we done till the end of problem number 8. Mm, So let me take one more problem for the discussion. This is the last and final problem for the chapter internal reconstruction. Post this, I'll start with liquidation of companies. So problem number 9. Path Limited had laid down the following terms upon the sanction of the reconstruction plan by the court. Furniture and fixtures which stood at the book value of 1,50,000 to be written down to 95,000. The freehold premises which was valued at 7 lakh showed at an appreciation of 55,000. So for this, the entry is reconstruction to furniture and fixtures, which is at 55,000 because which is downward revaluation. And the freehold premises, which was valued at 7 lakh, showed an appreciation of 55,000 means, which is reconstruction profit. So freehold premises to reconstruction 55,000. Plant and machinery showed fall in the value of 89,000 to be recorded in the books. That is reconstruction to plant and machinery. Investment at 2 lakhs was brought down to the existing market value 1,05,000. So 2 lakhs to 1,05,000 means 95,000 loss. That is reconstruction to investments. If you check here, no balance sheet was provided, just he provided some information. Debenture holders accepted to receive the following in lieu of their present 9% debentures of rupees 2,50,000. 1/5 of the total to be paid in the form of cash to them. 1/5 to be paid in the form of cash means 2,50,000 divided by 5, which is 50,000. To take over the land and building of the value 72,000. Okay, so land and building value 72,000 means 9% debentures to land and building. So remaining how much? 2,50,000 minus 50,000 minus 72,000, which will be 1,28,000. To forego the remaining unpaid portion as a policy of reconstruction. So this 1,28,000, you can simply make it transfer to reconstruction account. Write off the profit and loss account debit balance at 70,000, which had been accumulated over the years. So he is directly providing the P&L debit balance. In case of any shortfall, the balance of general reserve of rupees 1,50,000 can be utilized to write off the losses under reconstruction scheme. Okay, apart from the balance under reconstruction, you can also utilize the general reserve. In case of shortfall, the balance of general reserve of 1,50,000 can be utilized to write off the losses under reconstruction scheme. So it's indirectly conveying that you can utilize the general reserve also to knock off the losses derived through reconstruction. Okay. Show the necessary journal entries as a part of the reconstruction process, considering that the balances in general reserve utilized to write off the losses as per reconstruction scheme. So in general reserve we are not utilizing for the losses arised due to reconstruction account. But there is a special instruction given in the problem. The scheme is look like that. That's why we should need to pass the journal entries in the same manner. So first let me put one by one entry quickly in my OneNote. So this problem speciality is only for the particular general reserve utilization. This is the first time we are coming crossing utilization of general reserve. So which is problem number 9, guys. Guys, which is placed under practical problems. That's why I'm considering. Sometimes what the examiner will do, he will act smartly rather than giving a particular problem which was placed under the main module. He may provide under the practice session questions. Okay. So coming to the first point, so there is downward revaluation. So the entry is reconstruction account at R2. Furniture and fixtures, F and F account in simple terms. How much, guys? 1,50,000 minus 95,000 means 55,000. So next, the freehold premises was an appreciation of 55,000. So freehold premises account that are to reconstruction account. How much? That is for 55,000. Okay. Next, plant and machinery showed a fall in value of rupees 89,000 to be recorded in the books. That is reconstruction to plant and machinery 89,000. Right? Next, investment at rupees 2 lakh was brought down to the existing market value at 1 lakh 5,000. So that means downward revaluation is for 95,000. Reconstruction account data to investment account, which is for 95,000. Next, debenture holders accepted to receive the following in lieu of their present 9% debentures of 2,50,000. You can cancel entire 9% debentures account for 2,50,000, out of which cash payment is for 50,000, right? And land and buildings, to land and buildings provided for 72,000. Remaining will be reconstruction account profit. That will be 1,28,000. So next, write off the profit and loss account debit balance at 70,000, which had been accumulated over years. So now, can you please all of you start working the balance of reconstruction account? So in the first entry, minus 55,000 reconstruction debit. Second entry, reconstruction credit plus. Why for first entry, second entry I gave 55? Both are 55, 55. Oh, both are 55. Okay, then fine. So first entry minus 55 and the next entry plus 55. Third entry minus 89. Fourth entry minus 95. Fifth entry plus 128. So I have negative 56,000. So reconstruction not having the credit balance, it have the debit balance. So that is the reason why he clearly told that you can utilize the general reserve for 1,50,000. Now what I can do, general reserve 1,50,000 is there, right? So general reserve 1,50,000 I can utilize to knock off the reconstruction account loss 56,000. This is reconstruction account loss. P&L account debit balance. How much is given? 70,000. Or else you can do one thing. P&L account debit balance, first you can transfer to reconstruction. Directly reconstruction, you can knock off with general reserve. That is also okay. Let's do one thing. So P&L account debit balance, let me transfer to the reconstruction account. If I transfer then P&L debit balance, how much it will become? 70,000. Then reconstruction 70 plus 56, it will be 1,26,000. Do you understand? Now general reserve is there for 1,50,000. Now I can simply knock off this reconstruction loss with general reserve. Now the entry is general reserve account at R2 reconstruction account. That is for 1,26,000. So the remaining balance of general reserve of 24,000 simply you can show under balance sheet post reconstruction under reserves and surplus. This is the only special item here. But if you observe in our all past problems, what we done, we never end up the negative balance under reconstruction. We are always end up the profit under reconstruction. Such profit we are utilizing to set off the P&L account debit balance. Here, reconstruction account itself is showing the negative balance, and the P&L account debit balance also I transfer to reconstruction account, and the total debit balance of reconstruction I set off with the general reserve. That is the special point here. Okay. So this is all about reconstruction, guys. As I already informed in yesterday's session, so it doesn't matter how many problems you've done. Okay, so the problems will look like different to each other. and the adjustment may be similar to each other. So you should need to understand the scheme properly. Accordingly, you should need to provide the accounting treatment. Various models we checked. In one model, we like it's look like a balance sheet, but it is not a balance sheet. Something it is like a liquidator final statement from where we derived the P&L account debit balance and we done the reconstruction. In some problem, we seen the surrender of shares concept. In some problem, we check what you can call that is the recent problem. So rather than getting the credit balance and the reconstruction account, we are end up with the debit balance. In one problem, we seen the upward revaluation of assets. After upward revaluation of assets, those assets will be knocked off with the another liability. Okay, so like that complicated issues also we've seen. This is not the end of the internal reconstruction, to be frankly speaking. So as I informed you, it's always been a good practice to go for the next level of problems and understand it like for each and every particular chapter for 3 to 4 problems. Then you may have a high confidence level, and at the time of attending the examination, you can simply crack the problem which was asked there. Okay, fine. Then for our sessions, let me start with a new chapter. So the chapter name itself is liquidation of companies. Okay. Sir, liquidation of companies will be applicable for November 2023 attempt, but it will not be applicable for May 2024 attempt. This chapter was removed from the syllabus as per the recent guidelines of the ICAI, as per the new scheme launched by the ICAI. Just as an informative in nature, just I'm providing people who are going to write their examinations for May 2024. No need to watch these lectures, no need to attend these lectures, no need to prepare these lectures. But people who are going to attend their exams for November 2023, this chapter is going to applicable. Okay. Fine. So which is liquidation of companies? Guys, let me know first of all, do you ever listen the word winding up and liquidation? Or what is the difference between winding up and liquidation? Can you, anyone from the crowd? What is the difference between winding up and the liquidation? First of all, you should need to aware one thing. Whenever a company want to close their business, whenever a company want to remove, strike off their company name from the ROC, Register of Companies, then it should need to adopt a particular procedure. So because lot of times, in case of companies, the money is going to involve in a lot of hands, or in terms of investment, it is invested by huge crowd at that moment. At the time of closure, it should need to be happen in the transparent manner. So that's why to close their entire procedures, a liquidator will be appointed based on how the company is going to close. I mean, the company is going to close through resolution passed by the shareholders. The liquidator may be appointed by the shareholder itself. Maybe in certain special circumstances, due to the compulsory liquidation, or maybe due to decree of the court, if the company is going to close, then the liquidator may be appointed by the court itself, or any other particular approving authority may appoint. At that point of time, we may call it as official liquidator as well. Now, if you can imagine a joint stock company like Indian Railways or Reliance Industries Limited, how much big it is. That's why closure of the company will not happen as on a single day. Shut down, make it lock, close the books, come out. It doesn't happen like that. Okay. So because in case of liquidation, what the liquidator is going to do is going to realize different assets, is going to repay payment to the different liability holders in a particular order. So do you think that realization of property, plant and equipment will take as like realization time period of the stock? No. So stock is current asset, you can simply make it, sell it off. But realization of PPEs, okay, big vessels. Maybe if you take the Indian Railways, they don't know where the assets will be, to be frankly speaking, the physical presence. So factories, buildings, plant and machinery, it took some time. So a lot of bits they should need to conduct. They should need to adopt the particular procedure. They should need to awaiting for good buyer. Everything will be coming into the picture, right? So that's why when the liquidation procedure is initiated and to complete that particular process, it will take some time. It may be number of years as well, based upon the size of the company. Now, the entire process adopted by the company, we can call it as liquidation actually. The entire process adopted by the company, for this process, we can technically known as liquidation. But the thing is, then how the winding up is different from the liquidation, sir. Once done all the procedures by the liquidator should need to submit that particular report to the appointing authority. So maybe the court or maybe the approving authority or maybe the shareholders, whatever the case may be. Then ultimately, if it will inform it to the court, then court will pass an winding up order. Winding up order. That's why what I can tell, liquidation is a procedure adopted by the liquidator or the company for the purpose of getting the winding up order from the court. That's why liquidation is a procedure. So winding up is an event. It is an end event. An end event of the liquidation itself is winding up. But in the Companies Act 2013 or in any other specific acts, they are synonymously using the words winding up and liquidation. So there is no discrimination in their point of view. So because the end result of liquidation itself is winding up, so for the provisions interchangeably, just they are using both the words liquidation and winding up. But literally there is a difference between liquidation and winding up. Is it fine, all of you guys? So Muhammad Aslam just is telling that, sir, please announce that tomorrow is the last day for exam form fill up with fine. Oh, I too don't know. So just uh, Aslam just is telling that tomorrow will be the last day for exam form along with fine. Still, if any one of the student missed out, so just try to do it for today itself. Okay. Fine. Now let me open my PDF for our better discussion. Okay. So if you come here, liquidation is a procedure adopted by the company. So liquidation is a procedure adopted by the liquidator to close the company. Winding up, it is an event occurred at the time of closure of the company. So the liquidation procedure may going to take a certain number of years as well. In case of liquidation procedure, what really going to occur? That is realization of assets and a payment to the liability holders. And ultimately that winding up order will be passed by the court. Next, come here guys. So please all of you concentrate. This is the current situation about applicability of liquidation provisions in India. So liquidation or winding up, as I already informed you, I am also using synonymously both the words. There are two situations: compulsory winding up, voluntary winding up. So compulsory winding up means it's definitely due to some reasons, and that too it should need to be ordered by someone. So voluntarily winding up means The voluntary winding up may be due to shareholders, or may be due to creditors, or may be due to debentures, may be due to any other party. So in case of compulsory winding up, the company is going to close their business activities due to inability to pay their debts. Simply company became insolvent. The company's assets are not sufficient to repay the liabilities. Then the companies became insolvent due to inability to pay debts. If any particular court order for close the business, then Insolvency and Bankruptcy Code 2016 rules will be applicable. Sir, what is this Insolvency and Bankruptcy Code 2016? Simply we can call it as IBC. I'll show you before going to enter into all these issues. Okay. Why I am highlighting this point? Right now, most of the provisions are liquidation is not in the hands of Companies Act 2013. Even though the liquidation procedure is related to the company, but the liquidation procedure is related to a company, but still the provisions for that particular liquidation is not in the hands of Companies Act 2013. The scenario was completely changed. Sir, why they introduced another specific act even though Companies Act 2013 exists? To give the more transparency, and no one party of the existing company will lose money, or to provide the justice among all the existing stakeholders of the company, just they brought down a separate statute, which is Insolvency and Bankruptcy Code 2016. So there is a board called Insolvency and Bankruptcy Board of India, so which is form part of Government of India only, which you can call it as how are ICAI coming to exist through a separate act in the parliament. Similarly, a separate act in the parliament passed for broadening the Insolvency and Bankruptcy Board of India. So it will have some chairman, so some board members, everything will be framed. What are the objectives of framing that particular board? What are the activities will be conducted by that particular board? What is the scope of that particular board? How the liquidation procedure will be initiated by that particular board? Right now, I'm going to explain through in little bit practical manner. So let me go with Insolvency and Bankruptcy Board website, guys. First of all, IBBI, I think so. Yeah. So ibbi.gov.in, Insolvency and Bankruptcy Board of India. Okay. So I'll read this. What is that? About us. In about us, they will provide everything, right? Why it was established, what is the reason? Okay. So highlights only just I want to read. I don't want to read each and everything. The Insolvency and Bankruptcy Board of India was established on 1st October 2016 under the Insolvency and Bankruptcy Code 2016 code. It is a key pillar of the ecosystem responsible for implementation of the code that considers and amends the laws relating to reorganization and insolvency resolution for corporate persons. For corporate persons, if the corporate persons became insolvent, then it will be acting as a Bible for them. That is the point he is conveying them. Not only corporates, it also extends their harms with partnership firms, individuals, any other persons who became insolvent. At that point of time, the other parties should not suffer any losses or should be justified in a particular manner. So with the best interest of all the stakeholders, this board was established, right? It is a unique regulator. He's telling that it is a regulator. It regulates a profession as well as process. It has the regulatory oversight over the insolvency professionals. That means who have the authority to appoint a liquidator. Insolvency professional means here IBBI language, he is nothing but liquidator. Who is overseeing the activities of the liquidator, whether liquidator will acting genuinely or not, whether liquidator they are conducting the procedures transparently or not. Liquidator ultimately send what I can call the end reports to whom, whether they conducted the procedures or they initiated the procedures as per the act or not, unbiased manner or not. These Insolvency and Bankruptcy Board of India will oversee the actions conducted by these liquidators. So insolvency professional agencies, insolvency professional entities, and information utilities, all such persons will also be regulated by this particular board. I mean, there are so many other parties are also involved apart from the liquidator. All this is also overseen by this particular board only. Okay. Mm, fine. That is more than enough for me. Next, one more thing. If you check here, this is the board. How our ICAI have the chairperson and everyone. So this IBBA is also having chairperson, full-time members, ex officio members. If you check, okay, you know our Institute of Chartered Accountants of India will also have the ex officio members from different organizations. Okay, so similarly, if you check here, uh, Principal Legal Advisor of RBI, Ministry of Law and Justice, Additional Secretary, Joint Secretary of Corporate Affairs, okay, Economic Affairs, Economic Advisor. So different parties were form part of this particular IBBI. Next, one more thing. What is that? Yeah. So if you check in the examination module, valuation examination is there. Persons who have qualified this valuation examination are eligible to act as insolvency professionals as per this Insolvency and Bankruptcy Board of India. You know, our ICA is also going to conduct certain valuation exams. Based on that, who have qualified that particular examinations conducted by ICAI are also eligible to acting as the liquidators or the what you can call the professionals as per this Insolvency and Bankruptcy Board of India. So that means it is an opportunity for the professionals as well. Okay. And what I want to highlight apart from this, one second. So this is like an organization chart given to the Insolvency and Bankruptcy Board of India. So no need to go in depth. So just for your informative in nature, just I'm showing you. So why I'm showing this much, you know, even though it doesn't have much applicability coming to our portion, but in future, the total entire the liquidation profession itself is in the hands of the IBBA, Insolvency and Bankruptcy Board of India itself. And no need to surprise if at all they launch a separate courses for this particular purpose. So definitely, you know, in the dynamic environment, what is going to happen? Lot of frauds may will coming to the picture. Okay. Maybe innocently or intentionally they may conduct at that point of time. Right now, we have the authority to take the right actions. This Insolvency and Bankruptcy Board of India only, it is acting as a regulator at that moment. Okay. So that's why. So whenever you are getting a free time after your qualification, just you can spend some time on this. Definitely, it will give some fruits during your profession. Okay. So this is a structure and all other part. Everything will be covered here. Like it have the meetings, it have the strategy. Okay, so investigation department is there, inspection department is there, compliance department is there, grievance redressal is there. Okay, so everything was covered here. Prosecution, court proceedings, if you check. Okay, let it be. You can leave for the time being. You can come back here. So that means if any particular company is going to wind up due to inability to pay debts, then Companies Act 2013 will not be applicable. Insolvency and Bankruptcy Code 2016 rules and regulations will be applicable. Sir, due to any other reasons, if the company is going for compulsory winding up, in any other reasons means the reason is maybe due to order made by the NCLT. You know, NCLT is like a court in case of companies. If NCLT simply ordered for winding up, that is compulsory winding up, then the particular company should need to close their business activities. Then in which circumstances NCLT may order for compulsory winding up, let's discuss at later point of time. But order made by the NCLT means NCLT is a regulator in case of Companies Act 2013, then definitely the compulsory winding up procedure we should need to adopt as per the Companies Act 2013 only. Then at that point of time, IBBI will not be applicable. Okay, still the scope, some of the scope is in the hands of the Companies Act 2013, that is other than in the situation of inability to pay debts. Next, if you coming to voluntary winding up, sir, in case of voluntary winding up, nowhere Companies Act 2013 is applicable after 31st March 2017. That is from 1/4/2017 onwards, IBC voluntary rules and regulations only applicable. But a company which declared their liquidation before 31st March 2017, but still the liquidation procedure is going to continue. For that, Companies Act 2013 only applicable. Okay, I think so. This provision loses its relevance right now. So long back it was happened almost 6 years. So all the companies which initiated their liquidation, they might have already completed their liquidation procedure. Right now, completely each and every company should follow the IBC voluntary rules only. Is it fine? Related to the scope of the existing liquidation provisions, guys? Next. Sir, in which circumstances an NCLT may order for compulsory winding up, sir? The situations one by one, just I want to explain here. Please concentrate. Guys, a lot of issues are theoretical in nature. That's why just I want to go along with this PDF itself. Okay. Situation in which NCLT may order for compulsory winding up. In the first situation, first and foremost situation, company affairs are against the sovereignty and integrity of the country. So the activities conducted by the country itself is against the constitution of the country. Then the NCLT may order for close the business. Sir, can you give one example, sir? Let us assume this is a wartime in between two countries like India, okay, and X country. Or maybe the recent scenarios will lead to a war in between India and China. Let me take these two countries. Always people are using the example India and Pakistan, but right now the scenarios are a little bit changed. That is in between India and China. Okay. So let us assume a company which is registered in India, which is in the process of manufacturing input material for weapons, let us assume. So their business nature itself is manufacturing of materials related to weapons or manufacturing of weapons itself. Now, during the war, so Indian government also agreed for that earlier. But right now, during the war, whenever our government make an announcement, then all business should need to be blocked. But still, our Indian company is supplying that particular weapons to the other company, then it is against the sovereignty and integrity of the country at that moment. Then the NCLT may order for compulsory winding up. You know, if you really heard, at the time of that Galvan issue, okay, so the Indian government banned some China apps. Indian government banned some exports to China as well at that moment. So still, if you are involving in that particular business at that moment, even though it is order placed by the government, then it is against the sovereignty and integrity of the country, then the NCLT may order for compulsory winding up. Next, the company affairs are in fraudulent manner. The company was established to deceive the public. My intention is not to conduct the business. My intention is want to take money from the public as an investment and will diversify that particular amounts to my own activities. To deceive the public, just I want to take the advantage on the public money. I will utilize for my personal purpose. It is for your intention or for conducting any frauds. If the NCLT observes that that is the intention, then ROC or any representative of the central government make a petition to the NCLT. Based on that particular petition, NCLT may order for compulsory winding up. That is the second situation. And third situation, a company is defaulted filing their annual returns and financial statements continuously for a period of 5 years. Then NCLT have a right to make a compulsory winding up order. Sir, what about this annual return and financial statements filing, sir? Some of the student, they may already, let me explain here, which is actually a complaints procedure as per Companies Act 2013. For any particular company, so the financial year end date in India will be 31st March 2023. Right? Do you agree, guys? After this, once the financial statements preparation is over, a board of directors meeting will be conducted. Board of directors will approve these financial statements and they will propose the dividend as well. They will file the DRS, Directors Responsibility Statement, and everything in the board of directors meeting. After approved these financial statements by board of directors, auditor will issue audit report on these financial statements. Once auditor will issue audit report on these financial statements, then the company may call a general meeting. First of all, the company will send a notice to all the stakeholders for calling a general meeting. Then general meeting will be conducted by that particular company. In the general meeting, ordinary business activities and special business activities both will be conducted. Something like appointment of auditor, appointment of board of directors, declarations of dividend, and laying of books of accounts, all such are ordinary business. Any special business like expansion, maybe for any other thing other than these four activities, they may discuss, which are special business. Now, after completion of this general meeting, within 30 days and within 60 days, we should need to file some forms to the ROC, Register of Companies. Sir, within 30 days, we should need to file AOC 4. What is this AOC 4, sir? In AOC 4, we will clearly given that how much profit we achieved, what are the different expenses we have, what are the different incomes we have. All such information, all the financial statements information, we will just we will communicate to ROC through a form called AOC 4. And within 60 days, we should need to file a MGT 7 or 7A based on the company form. For 1% company and some of the private limited companies, they will follow 7A. For other companies, they will follow 7, whatever the case may be. In there, we should need to represent our directors' information, our shareholders' information, our coming projects, our certain ratios, each and everything here. Sir, why we should need to inform to the ROC? Ultimately, the affairs should need to know the ROC, right? Who is the regulator? Ministry of Corporate Affairs. Register of Companies itself is one of the regulator under MCA part. So that's why we should need to send it to the ROC. Now, this filing, people are in generally call it as ROC filings. ROC filings. And also we are calling as annual returns. Now, if a company who defaulted in filing this annual returns for a continuous period of 5 years, then NCLT can make an order for the compulsory winding up. That is the point he is telling. Do you understand? So just for your information, I'll show you one thing. So This is Ministry of Corporate Affairs official website. Okay. So here if you check under MCA services, MCA is going to provide a lot of services here. Under here if you check, LLP services covered, company services also covered. So filing all the forms are going to happen from this particular website only. So if I check the company services, so if you check various forms, e-filing and uploading of the forms, everything will be there here. Okay. And one more thing, each and everything should need to be happened with the help of DSC signing, digital signature. For that purpose, DSC services is also there. DIN services, each and every director should need to have a director identification number. Okay. And if a company want to establish a new company, if any person want to establish a new company, then incorporation procedure is there. Complaints filing. So what are the various forms you should need to comply? All such forms also given here. So earlier what I discussed AOC4, right? Let me check here AOC4. So AOC4 for consolidated financial statements, who need to file in XBRL. So form of financial statements and other documents with the registrar for other companies, something like that. They are given different AOC forms applicability for different companies. So I told you MGT7 as well, right? MGT7. So if you check form for filing annual return by the company, which is MGT7, for one-person companies and small companies, they should need to follow MGT7A. If these files were not filed by the company for a continuous 5 years, then the NCLT may order for compulsory winding up. Just for your informative in nature, just I showed here. Okay. So is it fine, guys? Yeah, Mohammed, you are right. Okay, MGT7A is for small companies and OPC. Right. So next, we discussed almost 3 situations. Coming to the 4th situation, NCLT may sumoto can also order for on providing equitable and justice manner. NCLT may order for compulsory winding up order. That means if NCLT feels something is going to happen in wrong manner, okay, just it can go for compulsory winding up order. And the company can also pass a special resolution for make a petition to the NCLT, then NCLT may order for compulsory winding up. In all these 5 cases, the NCLT may order for compulsory winding up. Once the NCLT ordered for compulsory winding up, then the liquidation procedure should need to be adopted as per Companies Act 2013. That is the point he is highlighting here. So next. So first what I will do, in our syllabus, we are only learning aspects, that is liquidation procedure, which is based on Companies Act 2013 only. But in the initial pages, they inserted the liquidation procedure as per IVC voluntary rules. As per, if at all, if a particular company is voluntarily going to liquidate, then how we should need to provide the liquidation procedure, they adopted in our syllabus. But due to inability to pay debts, what is the procedure they are going to adopt? They are not yet inserted. So that's why what I will discuss, this I will discuss in theoretical manner. This I am going to discuss in practical manner, the procedure I am telling you. So first let me discuss the theoretical manner, how IBC voluntary rules will be applicable. Then later on practically let us check what is the procedure going to be adopted as per the Companies Act 2013. Is it okay, guys? Guys, if you don't mind, can you please just give like 2 to 3 minutes time? Okay, I'll start 2 to 3 minutes. Please be all of you hold. So just I'm under unmute mode. Please be all of you under hold. A procedure based on insolvency and bankruptcy voluntary rules and regulations. Okay. So this is completely in theoretical manner. Just why I'm trying to tell here, if at all they placed any particular question, then you should need to answer. I don't know. That's the reason why they are removing this particular chapter in the new syllabus, because the scope is completely different from Companies Act 2030 to IBC rules and regulations. I think so due to recent developments made in that particular board, even the other chances of regulating the liquidation procedure will be straight away removed from Companies Act 2013. So the entirely slowly just jumping from here to there. Okay. Just anyway, let me start the discussion with how the IBC voluntary rules and regulations are going to applicable and what procedure the company should need to adopt when a company decide to wind up voluntarily. Okay. Guys, one thing you should need to remember in case of voluntary liquidation. Sir, when a company is eligible for voluntary liquidation, first of all, if the company is solvent, then only it is eligible for voluntary liquidation. If the company is insolvent, if the company itself is insolvent, then compulsory winding up order will be passed, or compulsory winding up itself is applicable. Then the company's inability to pay debts, it became insolvent. Then IBC code compulsory winding up rules and regulations will be applicable. So that's why to choose voluntary liquidation, a company should need to prove their solvency first. How the board means here always Insolvency and Bankruptcy Board of India, the board. How the board knows the particular company is solvent or not? If you should provide certain information for the purpose of accuracy of your solvency, then based upon the evidences, it can believe, yes, that particular company is a solvent. For that purpose, each and every company majority directors should need to provide a declaration along with affidavit that our company have the capacity to repay all our existing debts, and the company is able to pay the debts out of the proceeds through sale of assets. To prove the solvency, the company should need to file this declaration along with affidavit. Apart from this, company should also need to file the previous 2 years audited financial statements along with operations of business and valuation of their assets and liabilities by the registered valuer. Sir, why for this? Why this is? So simply declaration is not sufficient. The declaration should need to be accompanied with the registered valuer valuation sheet. The registered valuer valuation sheet, he will clearly assign values to the assets as well as values to the liabilities. From that particular valuation sheet, the board can simply observe that yes, the company have the ability to pay their own debts, and it is also supported by the declaration plus affidavit. Then the solvency picture will be proven by the company. So once the solvency picture proven by the company, within 4 weeks, this entire voluntary liquidation should need to be approved by the shareholders. You know why? Who is going to make that proposal? In case of voluntary liquidation, no court will be initiated the liquidation procedure. It is due to intentional liquidation by the internal parties of the company. That is nothing but either shareholders or the creditors or someone. So that's why ultimately this liquidation procedure should need to be approved by the shareholders by passing a special resolution in their meetings. Maybe it may conduct a extraordinary general meeting for the purpose of liquidation procedure. Then it will pass a special resolution in that particular general meeting. Then that special resolution should need to be submitted to the board within such 4 weeks. Sir, if it is liquidation procedure initiated by the creditors, then 2/3 of the creditors should also give the approval. No, the liquidation procedure is not initiated by the creditors, then approved by the shareholders is more than enough. We can specifically tell that the liquidation procedures are literally initiated from the date of passing the special resolution or from the date of approval by the creditors. From that particular date only, the real liquidation procedure is going to be initiated, because the first point is not related to the liquidation procedure. The first point is related to proving their solvency. So when the real liquidation procedures are initiated, when the shareholders or the creditors pass their specific resolutions in the meetings. So once that voluntary liquidation procedure is initiated, the same information should need to be passed on to ROC and the board. ROC means Register of Companies. Board means IBBI. Why to the two different regulators we should need to pass on such information? Because ROC should need to aware, okay, this company is going to close their business. That's why I should need to struck off this company. Why I should need to provide the information to the board, who ultimately provide the liquidator, who ultimately provide the professional, board only. So that's why once we provide such information to the board, Then board will appoint the liquidation professional, or you can also call it as insolvency professional. Sir, insolvency professional means the company is not insolvent. Insolvency professional means a professional who is appointed through Insolvency Bankruptcy Board of India, who is officially known as liquidator in our language. Then liquidator will conduct his activities. His activities means what he will do. He will realize all the assets. He will settle the payments to various liability holders in the particular order. Once the liquidation procedure is over, liquidator will submit a final copy to the adjudicating authority. Sir, what is the meaning of adjudicating authority in any law? Adjudicating authority means approving authority. So if the approving authority is IBBI, ultimately the liquidator will send a final copy to the IBBI itself. In that final copy, what we can able to find? Different realizable values of the assets and payments made to the different stakeholders of the company. Then this final copy will submit to the Insolvency and Bankruptcy Board of India or the court, whatever the case may be. Then the adjudicating authority will pass a winding up order and it will be sent to ROC within 14 days to struck off the company from the database. So once it will pass the winding up order, from the date of order within 14 days, it is going to be sent to the ROC. Once ROC received that particular order, ROC will strike off that particular company from the database. Once ROC strike off that particular company from the database, no one can file a suit on the company. That's why passing up the winding up order means company closes all their activities, including their legal stamina. No one can file a suit on company. Company may not file a suit on anyone. So winding up order will have that much of power. Winding up order will supersede all the activities conducted previously by them. Okay. So this is nothing but voluntary winding up provisions as per Insolvency and Bankruptcy Code 2016. Guys, in deeper manner, I'm not discussed. If you check the ICA material, like couple of pages, just they developed the content. It's altogether our time boundness will be there definitely while reading any particular chapter, while understanding the chapter. Just if you can understand the intricacies in this particular manner, that is more than enough for you. So next, in case of compulsory winding up due to NCLT order, as I already informed you in this chapter, due to inability to pay debts, which procedure they should need to follow, they are not provided in the chapter. That's why I'm not going to discuss anything. But I seen the procedure in the IBC website itself once upon a time, but no relevance to discuss such points. Anyway, not our cup of tea. This chapter itself is completely removed from the next attempt onwards. This is exclusively for those students who are going to write for the forthcoming examination. So that's why I don't want to take it this by choice. But for earlier attempt students, I discussed how the Insolvency and Bankruptcy Code 2016 rules and regulations will work in case of compulsory winding up as well, but not required as of now. My main focus on if the company is going to liquidate through adoption of compulsory winding up procedure due to order passed by the NCLT, then at that scenario, Companies Act 2013 will be applicable. How the procedure is going to happen, now I'm going to discuss. Please, Arafi, concentrate here. Sir, you know already, once the NCLT may order for winding up, then Companies Act 2013 will be applicable. Sir, sometimes if you check, as I informed you, if the ROC want to make a petition to the NCLT, if ROC feels the company is not going to conduct their affairs in transparent manner, the company was established to deceive the public, to conduct the fraudulent manner, or any central government representative or anyone, if you want to make a petition, just he can make a petition to the NCLT. After verifying the affairs of the entity, NCLT may order for compulsory winding up. I told you in some of the reasons for compulsory winding up or some of the causes for compulsory winding up. In such situations, first, the procedure itself is you should need to make a petition. Along with the petition, the NCLT may ask for statement of affairs of the company. Statement of affairs of the company. Or if the NCLT sumoto itself, they take a decision for compulsory winding up, then no one provided the petition, then at that point of time, NCLT may ask the statement of affairs of the company from the company itself. From the company means who is the company? Who is conducting the activities of the company? Directors, board of directors. Sir, board of directors will prepare the statement of affairs of the company. What they will prepare, board of directors? Board of directors will provide all the estimated realizable value of assets and estimated amount payable to different liability holders. And they will also tell surplus or deficit in point of view of equity shareholders will be how much. They will provide one particular statement. Ultimately, this statement will be submitted to NCLT along with the petition. Or there is no petition, they will straight away submit the statement of affairs of the company. Now, this statement of affairs of the company will be submitted by NCLT to the liquidation professional. The liquidation professional means ultimately liquidator who is appointed by court or NCLT, whatever the case may be. The statement of affairs will be handed over to this liquidator. You know why? Liquidator is altogether a new person to the company. He don't know anything about internal affairs of the company. What are all different assets held by the company? What are all different liabilities we should need to pay? It is not known to the liquidator, really. Now, this statement of affairs is highly useful to the liquidator to decide the benchmark value for the assets in the market, because board of directors are such a persons who know much about the internal affairs of the company, because according to their view, they prepared all the estimated realizable values of assets and liabilities. Then this document will be acting as benchmark for the purpose of realization of assets for the purpose of making payment to the various parties. Do you understand all of this point? So by taking the base document as a statement of affairs, liquidator will be act or liquidator will act. This is only the base. Liquidator can realize more than that. Liquidator can realize less than that also. And one more thing just I want to highlight here. Whenever a liquidator will be appointed in that particular company, board of directors will lose their rights, will lose their responsibilities, rights and responsibilities and duties. They will lose all their rights. They will lose all their responsibilities. They will lose all their duties as well. Now, board of directors will not call it as board of directors. They should not involve into the internal affairs of the company. Now, on behalf of or instead of board of directors, who will conduct the business activities, sir? Liquidator only will conduct the business activities. Who will initiate the manufacturing process? Liquidator, sir. Who will procure the raw material? Liquidator only. I mean, all the business related decisions, who will take care, sir? Liquidator. So company is going to close now, then why the manufacturing process and the production is everything going to continue? It doesn't happen as on a single day, guys. If you close something like this, employees will suffer. If you close something like this, raw material may be damaged. So that's why based upon the time and based upon the particular circumstances, he will slowly shut down one by one. Do you understand? And at that particular point of time, shareholders also will lose all their rights. Not only the board of directors, shareholders also will lose their rights. Shareholders are termed as contributories only. Contributories. So that means shareholders are not eligible to participate in the general meetings and provide the resolutions. Liquidator, you can conduct this activity like this. We are passing a resolution. No, shareholders will not have that right now. Those are not the owners of the company right now. Those are the contributories. They contributed something to the company. That's it. Now, who is the captain of the company? Liquidator itself is the captain of the company, who will take all the decisions instead of board of directors as well as shareholders. Okay. So once the liquidator is appointed, then liquidator, based on the statement of affairs document, he started realizing the assets and he started making payment to the liability holders. On the basis of that, he will prepare one statement which is known as liquidator final statement. In that liquidator final statement, what he will provide, what are all different assets he realized, what are all different liability holders he made a payment, including preference and equity shareholders, how much he made. This liquidator final statement, ultimately he should need to submit to the adjudicating authority or the NCLT, whatever the case may be. So based on this liquidator final statement only, once it received, then the court may pass a winding up order, and ultimately this should need to the send to the ROC. Then ROC will struck off the company name from their database. This is the legal procedure should need to be adopted by any company as per Companies Act 2013 if it is a compulsory winding up order through the NCLT. Is it fine, guys? Hope you understand this background story. So now, in this chapter, what we are going to learn, sir, theoretically we understand in background what is really going on. Sir, coming here, what are the main aspects we are going to learn in this particular chapter? As you know, we are going to learn statement of affairs, definitely. How we are going to prepare that statement of affairs? Is there any specific format? Who will prepare, ultimately it is hand over to whom also, who will prepare board of directors? Ultimately to whom it is hand over? To the liquidator. Okay. We will also discuss like who is preferential creditors. We will discuss overriding preferential payments. We'll discuss the concept of list B contributory. We'll discuss liquidator final statement. Sir, like importance wise, I can call in this way the significant topics from examination point of view was liquidator final statement is the first preference, then list B, then preferential, then overriding preferential, then statement of affairs. Like this I can tell. So simply if you come here like this more or less, okay, in this particular order, the order of preference will be there except this two. So preferential criteria is important concept, then overriding preferential payments. So this is significant topics from examination point of view. Liquidator final statements, it look like receipts and payments account. Okay, what are all the different assets he realized actually out of sale of the assets, and various payments made as per the order given by the Companies Act 2013. He will prepare the liquidator final statement. So a lot of issues we are going to discuss at the time of preparation of liquidator final statement. And the list B contributories means, in fact, we are discussing liability of the list B contributory liability. So whenever I'm talking about list B contributories, who are list A contributories, who are list B contributories, how these are different from each other, why the liability of list B contributory is going to arise at the time of liquidation, such all issues we are going to discuss. Coming to these two topics, preferential creditors and overriding preferential payments. It is a privilege given by the Companies Act 2013 to certain type of liability holders, even though those are unsecured, both are unsecured. They are having, or they superseded the secured creditors as well. they superseded other secured creditors. Still, they are having a choice to get money from the liquidator before making payment to the other secured creditors. Why? What is the reason why such type of privilege is there for preferential creditors and overriding preferential payments? We are going to see, and who are preferential creditors and who are overriding preferential payments, which parties they are covered. Such all issues we are going to discuss. So in the recent times, they are asking questions from these topics also for 5 marks. So that's why these are also a little bit important. Then after discussing all these issues, so in final, we are going to discuss something related to statement of affairs. Sir, statement of affairs, you know, it is prepared by the board of directors. There is a specific format given in the Companies Act 2013, how to prepare the statement of affairs. It is a little bit lengthy, guys, and that too format based. Okay, nothing is great here. So just in that format, how we should need to be work out, we should need to know. And along with this statement of affairs, we are also going to prepare list. Okay, I'll tell you at that moment. I don't want to confuse you. Along with the statement of affairs, we will also provide another particular statement, which we can call it as statement of deficiency. Statement of deficiency. What is the statement of deficiency? Why we should need to prepare along with statement of affairs? What is the reason? Also, I'll try to explain at that moment. But examination point of view, these will be the important topics. Then from tomorrow onwards, first, let me start with the liquidator final statement. You know, but procedure wise, without having statement of affairs, we can't prepare the liquidator final statement. But no worries. In our academics, we don't require any statement of affairs. The every information they will provide in the problem itself. That's why let me start with the liquidator final statement, followed by the other topics like list B contributory, overriding preferential payment, preferential creditors, and statement of affairs, and all of this stuff. So definitely it will take like around for our 4.5 to 5 years. So we have the sufficient hours. So let's discuss all these topics in next couple of sessions. Then we can close our wing. Okay. I don't know about the remaining topics, how far you are having the clarity. But from my side, for my topics, I'll definitely provide good material to you once I done. As I promised you, I will provide the accounting standard notes also. It will be highly useful who are going to provide or who are going to give their attempt for May 2024. Okay. So bye-bye, guys. Have a nice day. Let's meet on the next session.